Good morning, ladies and gentlemen, or good evening, depending on your time zone. We have various viewers from different areas. However, it is CPI day. This video is going to be coming out several hours before the CPI report is published. So we will link down in the description below if you want to fast track, if you're watching later, to the CPI report if you haven't already done so. So we're going to be talking about the CPI report, where we expect it to come in at, and some of the things that we're going to have to be on the lookout for. So now, during the weekend deep dive, that will also be linked down in the description below if you guys want to check that out later. We went over the CPI expectations, and well, we didn't have the 3.3 expectation for the CPI year over year for October. Now, when I first saw this, I was like, you guys got to be kidding me. There's no way you're going to hit this. Maybe we need to look at some evidence of why we may or why we may not. So we're going to dive into the previous CPI reports and kind of talk about what could be driving this higher or lower. I am positioned slightly bearish for this move, taking a very small bet through options. That's just me disclosing basically what I'm thinking. I'm basically putting my money where my mouth is, and I'm looking bearish. I'm more bearish skewed. As you guys know, or you don't know on this channel, I'm more leaning towards bear, but I do talk about the bull and the bear thesis in the short term. So looking at this, 3.7 to 3.3, this is a significant jump down. And if we actually look into the CPI report itself, that would imply nearly a 0.5 decrease. So we really got to go back June to July to see this type of decrease. So if we go back to the, let's say, June report, let's start off with that. And we basically go down to energy. Everyone's going to be talking about energy just because that's going to be the main driver. So we saw energy at nearly negative 16.7%. And similarly, if we duplicate this and go back to the July report where we got a similar area or number, we see that energy was also negative 12.5. So we need a decent decrease in energy. And here's some of the problems that attune with that. If we go to the monthly view and we go back on crude, this is crude oil, that what was it priced back in 2023 of October. Right, this is the October report. So we're looking at a range of price from $79 all the way to $93.69. That is the monthly range for crude. Now, why is that important? Well, let's take a look at what October did for crude. And remember those numbers, 80 to 91. So we're about the same month to month or year to year on crude prices. Now, there is a lagging indicator of what crude does to gas prices. And if you noticed in the past, let's say 2-3 weeks, we have seen falling crude prices. So we definitely could get a negative number in crude. I don't believe that we're going to get a negative 12% in crude. If we look at the latest report that we have for the inflation that was released in September, the last CPI report, we can jump down to the energy section because that's really what everyone cares about because all the others have been positive. We only saw a 0.5 decrease, and let's just compare where we were then. So looking at September, we're looking at all the way from 95 to 83 versus September of last year, basically the same range or slightly lower. So accounting for that, looking at it really, we could get a positive number. That's very possible. We'll talk about this all in the live stream. So guys, so make sure you're subscribed and like the video, really helps you through the algorithm. Let's drop by the stream. We'll be answering any of your questions live, going over the CPI report, going where the markets are going to be going, covering what happened during the day. So we really would love for you to come out. If you can, that'll be around 7 o'clock Eastern Standard Time. So make sure you guys hit the sub button and notification so you can make sure you're notified of that. But looking at this, I'm not really seeing, and I'll be frank, I could be wrong. Full disclosure, I could be wrong. You could be wrong. Everyone could be wrong. I don't think 3.7 to 3.3 is actually going to happen. That would mean shelter inflation, which we really haven't seen shelter inflation go down. We haven't seen food necessarily go down, and energy is the last one. Again, this is the volatile number. Remember, guys, this is the number they're going to look at for that includes crude and food. So those two things on a historical basis from a year ago, even if we take this number of 79 all the way up to 93 versus the previous, that same month, it's not a significant drop. You're only talking about, if you take from the lows to basically the high, you're looking at 15%. So if they skew the number that way, but again, this was the median price over the month. If we look back in September, or correction, October, November timeframe, we're looking at a pretty nice MACD range of $80.12 versus same here, I would argue 87. So a dollar decrease, that's not a significant amount for crude to go down. Comparative year to year, guys, remember this is a year to year report from October to October. So I'm not really seeing it. Maybe throw down the comment section below, guys, if you see something I'm not. And here's the other thing. Crude, I laugh at this, guys. It's like, I'm not done. I'm not done. I'm coming back to life. And we all thought crude was dead. I openly said on the Weekend Deep Dive that crude is basically in a toilet. And I think crude got its feelings hurt because it instantly rallied back above the 50 weekly, back above the 200. So is crude going to come out for a breakout, or is it a dead cat bounce? Throw it down in the comment section. 1 for rally, 2 for dead cat bounce. I want to hear your thoughts on that. But looking at this, if crude makes a comeback and you have a crappy CPI report, markets are going to come unraveled because Powell kind of gave you the most mixed message approach in existence of throw the dot plot out, but we're not done tightening, but we may be done tightening when we need to see data dependency. I'm like, dude, you've lost all credibility whatsoever. And how did the markets react today? Well, we actually got something interesting out. We have a failed breakout on the S&P. So the S&P broke to a higher weekly high, failed to hold it, closed below the last week's high. And that means that could be something interesting. Now, this is what I would say a failed breakout. However, again, CPI on deck. All this analysis basically goes straight out the window once the number gets published and the market's reaction. Remember, you could get the number you want, you cannot get the reaction you want. So we have to pay attention to what the market is telling us. And that's going to be very crucial for tomorrow. The levels we need to pay attention to for tomorrow, that's basically going to be the line in the sand, 440.93 for the breakout. We just broke above it, so we need to see, do we get a strong break above it again? If we get a mediocre, like spike the high, sell off back, if you guys remember the October or November of 22 CPI report where we spiked like 4% on the NASDAQ, 3% on the S&P, and just sold it completely off on open. Again, be on the lookout for that. Those scenarios have happened. So if we're breaking above 440.93, we do not need to come back down to it. We need to basically keep going. You already broke through it, so the second break should be with momentum. There really shouldn't be any support or resistance there. It should just be a clean break if you're going to go higher. And that's the first thing I'm going to be looking at. Do we hold this level to be bullish? That's where I'm going to know I'm wrong. I always say on the channel, know where you are wrong. I'm taking a bearish bet on the S&P through the options spread for Friday. So full disclosure there, I'm looking bearish. Now, I know where I'm wrong, 440.93. Now, where do I know I'm right? Well, if we basically just engulf this entire candle, break below, that's 1.54% roughly. And really, we could actually just come back, bounce right here, bounce off the 50. So once we get down to 433.40, I'm taking profits. So that's just my game plan for the day. I bought the option spread prior to close. So guys, don't chase the market necessarily. Now, why don't I say chase the market? Okay, well, you get a 1.53% cut. You buy into, okay, it's officially the bottom. You bounce off the 50, and then your trade absolutely goes completely against you. To me, I want to see the 50 break. I want to see close below the 50. I want to see this gap filled at 340.72. That's where I'm going to take the short position because I got plenty of room to run. This candle is basically in no man's land. We're coming back down for this gap fill. Then my target is the 200-day moving average. So again, this is where I'm going to go short. This is my target. That is my plan for the week. Again, we have to assess depending on how everything goes. But if you are below 433.40 and 43.224 on a closing basis, I've been looking at shorting this thing. That's where I'd be looking. Where I enter, well, I really like the base of this candle at 430.85. That's just where I'm preferential. And some of the things I have noticed on the S&P, if we take a look, volume dropping off, price going up, stagnation forming up here. Okay, well, that either means that we're getting ready for another rally or an absolute dump. One of the two is going to happen. Inside bar closed today with a failed breakout. That's telling me more leaning to the downside where people didn't necessarily want to buy. If we jump over the NASDAQ, we basically went in a couple cents, touched our weekly high, however, backed away from it. Doji candle inside bar. This means indecision. We could easily, and I mean easily, form another massive candle right here and head higher. That's very possible for the NASDAQ. Again, 378.54, and NASDAQ actually has a caveat to the upside, guys, 380.14. That's where I would look to get truly bullish on the NASDAQ. That's coming back to the 52-week highs basically over here, and that breakage would be where we basically got rejected before, getting back above it, closing back above it would be absolutely monstrous. That's where you go bullish on the NASDAQ and probably continue into the Santa Claus rally that historically happens around this time. Now, I did cover this in a weekend deep dive, but I just want to recap. RSP is still a turd. That means this broader market is not rallying. If we jump over to the IWM, still a turd. It's holding the relative lows today, but it didn't really advance anywhere higher. So again, this could be setting up a bullish inverse head and shoulders here, or it could be setting up an A to B pattern on the way down. So again, we have to keep all this in mind and more, guys. RSP is basically forming that inverse head and shoulders more clearly if you're not seeing it here. And that could really mean that my trade is wrong. I'm fully aware that this trade could be completely wrong. To me, I look at a couple things like the fear and greed index I will jump to in just a second. But for me, guys, I'm really struggling. And again, throw down in the comments section if you guys have any thoughts. Why are we stagnating on core, which is everything but fuel and food, but we're being fine on regular CPI? That makes no sense to me. That means food inflation has to go down significantly, or oil, as we saw in these previous reports, where in the previous one we only got a 0.5. Here we got negative 16.7. Here we got negative 12.5. And again, this is mainly driven by fuel oils going down. If we see here, fuel oil negative 36, here negative 26.5. So even getting these numbers to drive it similarly historically, I really don't see it, guys. I really don't see how this report is going to manage a 0.4 decrease when previous reports came in significantly worse, in the sense of there was a larger negative, and you're going to go from a negative 0.5 to all the way to like negative 20, negative 16. Fuel has not done that, guys. Nowhere in the country has done that. And once more, let's just take a look at the AAA gas prices. So taking a look at this, guys, a year ago, 3.76, current 3.3. So if we just do some simple math, it comes out to a basic 0.1 or 10% difference. Now, that is not enough to drop the CPI report as a whole. I do think that based on that number, and this is for now, so we actually really have to look at a month ago versus a year ago, that's not as much of it. That's maybe a 5% difference. So that's not going to be enough to drop the report. I think you may get from a 3.7 to a 3.6, maybe. And that's assuming nothing else continues to rise faster. So again, we have to keep an eye on that. As you can see, a month ago, we were 3.628 versus a year ago, 3.76. So again, skewed. Again, adding credence to what I basically said in the beginning of the video, that, well, we were back here. If we go back to September, October, we were here. And then September, October, we were here slightly lower. So again, I do expect a negative number possibly for this, maybe a -5. That's what I'd be assuming for energy as a whole. As you can see, -5 there, so maybe -10. Again, I'm not really seeing it, guys. Throw it down in the comment section where you think the report is going to come in with a bonkers beat here. And are we going to get 3.7 or are we going to get 3.3 like they're forecasting? My wager is on something worse than this, and I think core may even possibly tick up. So leave it down in the comment section below what you guys think. Throw a like on the video. It really helps you to the algorithm. And thank you so much for watching. I really hope you guys come to the live stream later tonight. So hope to see you all there, and have a wonderful day.